Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet.
What's going on? Money Morning Live. Hope everyone's doing well. Enjoyed your time with Brian King, but right now, bringing in Nick Black talking crypto, and it seems that this man has bought some paint. Let's see what this is all about. Nick, in 5, 4, 3, 2.
Pew, 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 pew.
Pew.
Hey, you pewed.
Yeah, I finished it for you, man. You know, I think I'm getting on the train a little bit here. Just want to be like you, Nick Black. It's all.
Welcome to the pew. Welcome to the pew. Yeah, I did. I got into some paint over the weekend. It's colorful and fun, and it's based on one of my favorite artists, Fewocious. So we'll talk about that. So welcome to Alternative Wealth Daily Live. We've got some fun stuff today. We will talk about markets. They're a little red. Bitcoin kind of S the bed a little bit yesterday and a bit the day before, but a lot of it was, I think, we've had many, many weeks of up and sideways, and you know, these things stall out. Enthusiasm stalls out. And then you get some Fed guys flapping their gums about what they're going to do. We got to raise rates as quick as possible. Yeah, of course you do, because you got to be able to take credit for the CPI coming down, which it naturally will anyway, whether or not you're involved, but they have to take credit for it. If they don't raise rates a whole bunch real quick, they can't take credit for inflation coming down, which they have zero control over, but that's fine. Let them be them. Today, let's see, some baby news. Janet Yellen is going to speak in broad terms about how the Treasury is going to support the government's efforts and all the agencies' efforts to create a fertile and innovative landscape for crypto assets. I think they will steer clear of talking about stablecoins. My guess is, what do you think, Eric? Stablecoins in general, when the Treasury, oh, by the way, little side note, a bill was proposed that would not allow the Federal Reserve to create or manage any amount of any future US dollar backed stablecoin. So if there's a central bank currency issued by the Treasury, the Federal Reserve will not be able to just send it out to society.
That's a
I
good
thought that
thing.
was interesting. It doesn't mean it will pass, but it definitely means they put that forth. So
It's out there.
It's out there. Stable coins. Let's say the U.S. releases their own stable coin. What do you think happens to all these private stable coins?
I will say whether it'll be good or bad for stable coins. How about that? I think it would give more exposure to them. But it would probably be bad for them overall, right?
Then I think it's going to be bad. I think they will start to regulate the smoke out of them, and some of them will just be looked at as outright frauds and quasi Ponzi schemes, like Terra Luna. It doesn't matter how much Bitcoin you buy. It doesn't matter how much money you borrow against your Bitcoin to buy more Bitcoin. Bad behavior is bad behavior. At some point, math and common sense and reality kick in, and it doesn't matter. You know, Byron Gilliam did a really good article about systemic risk. That we've gone from too big to fail to too big to regulate to so big it's impossible to save, right? So 2008, we had too big to fail, and so they tapped the big banks on the shoulder and said, "Hey, man, come in here and, you know, fix all this. Buy some stuff." I said, okay, we'll buy Bear Stearns, and well, we can't buy those. We can't afford them, so we'll just let those guys fail. Okay, fine. And then they got bigger and bigger. And who would have thought that if you give banks a get out of jail free card and repay them for all of their gambling losses, that they would take advantage of that, and you would create massive, massive moral hazard? Who would have thought that could ever happen? Well, it happened. And now fast forward 14 years, and banks do whatever they want. And they know that no one goes to jail, that no one is held accountable, and that any amount of money they lose, doing any kind of behavior, illegal or otherwise. I start with illegal because a lot of the stuff that banks do is quasi-legal, and if you or I did it, it would be illegal. But if a bank does it, they get repatriated all their lost cash, all their losses, if they're a big enough bank. Well, now we've gotten to the point where the banking system is so massive that it's so big, we may not be able to save it. There's no longer that buyer of last resort to come in and save the market. There's no one to turn to. Well, the crypto market could become that way too. Let's say one of these stable coins got so big, backed by whatever kind of quasi assets they're backed by, and there's nobody that can go and buy them back into existence. If there's some kind of cascading unwind, or for instance, let's say your treasury function is to back everything with Bitcoin. Cool when Bitcoin goes up, not cool when Bitcoin goes down. And Bitcoin, let's say Bitcoin goes down like it did yesterday, which by the way, because of that, some of the other coins became unhinged. And you want to guess, Eric, who the biggest two losers were in the leverage space? And this is of course through Binance and FTX, our favorite exchanges. Do you want to guess who the biggest two groups of losers were?
I don't know, Nick.
I'll give you a hint. Dogecoin and Solana.
I was going to say Solana, but I didn't know if that's exactly what you were getting. I should have more confidence in my answers. I think I need to believe in myself a little more.
And apparently the derivative, the futures markets for Dogecoin and Solana got blown up more than anyone else. Why? It's weird to think that those would be where the biggest amount of degenerate gambling is. I can't imagine that. It's crazy to think. So they sustained a lot of losses. So there's a lot of people that are no longer in the market, which great. Bye. Have fun clocking in at that 47-hour-a-week job as you pay back your losses, bro. Anyway, look, bad behavior gets punished. So there is a scenario where one of or some of these stable coins could kind of coalesce into a big project, kind of like Terra Luna is trying to do. They could back it with flimsy assets. And yeah, Bitcoin, we love it. But as far as it's flimsy, man. It's volatile. You can't use Bitcoin to back anything. It's Bitcoin. It's a quagmire. So if you do and it unwinds, your whole fund unwinds, all of your stable assets unwind, all of the pegs unwind, like we just saw happen. Eric, do you remember last week we were talking about Waves and their stable coin? You know that Waves is now down 50% and the stable coin has basically crashed completely. It's completely dust.
Good thing I didn't buy a whole bunch, in other words.
So this is what can happen if you run these experiments, and this is what these are. DeFi right now, these are big, vast experiments. And if you run these experiments and they don't turn out so well, it's gone. And it's gone. You remember the South Park? And it's gone. He's like, I just gave you, yep, it's gone. Bank customers only. So there's these levels. So we're going to keep that in the back of our mind today as we talk about markets and things like that. But before we get into all that stuff, should we talk about something colorful? Do you guys, would you like to learn about paint?
Yeah, so Nick hijacked the crypto news today, and we're actually adding something else here because he went on another NFT binge. And tell us about this paint project, Nick.
Okay, so one of my favorite artists, I have like 3 favorite artists. It is Beeple for his social commentary, not so much the artwork. It is Fewocious for the artwork. He's like a young, kind of like Picasso. He's very, very interesting, very colorful, kind of weird and abstract. And I really like the artwork. And then, few. And then I like Paul Jackson and Jonathan Thunder. But those, my main 3 would be Beeple, Paul Jackson, and Fewocious. Well, Fewocious, who, by the way, his art is incredibly valuable. I have 2 pieces. One that's a really low number that I like. And then another piece that was a little bit higher number. And I thought, they're building this Fewocious world, this art metaverse, which again, we don't know what a metaverse is. None of that stuff really makes a lot of sense, but it is this big giant ecosystem where you will create these art characters. We don't know anything beyond that. It's really very speculative. But I sold one of my Fewocious pieces. I think I sold it for, oh no, I don't think, I know. The floor was 17.5. I listed mine at 17,000 last week. I got 17K out of it. I spent 6. I then took that and I flipped it into paint Sunday afternoon. So Sunday morning, they had the paint sale. If you owned a Fewocious piece, and this is through Nifty Gateway, by the way, which is what you're looking at now. If you owned a piece of Fewocious art, then you got a discount on paint. You need paint. Think of paint as the currency for this new world. So it's this kind of world created by Fewocious and the Web3 community and a lot of other artists that he's worked with, which is a lot. And remember, Fewocious has exposure to Sotheby's, Christie's. His artwork is that level of artwork. So let's do a little game theory now. You say, okay, I don't care about the paint. I don't care about this. I'm just in it to make the money. Fair play. However, Nifty Gateway started as the biggest NFT platform. And then what happened is they lost ground to OpenSea. They lost ground because OpenSea just made it real easy to buy these stupid avatar pieces, the PFPs, right? The personal kind of little avatar photos, okay? And so when Nifty Gateway kind of missed that boat, they missed that craze, they lost a lot of money. They didn't lose it. It's opportunity cost. They lost a lot of potential profit. Well, they're the ones that are kind of behind this drop. They're kind of supporting it. It launched through Nifty Gateway. It didn't launch through OpenSea or even LooksRare. That's the secondary market. So my guess is they're going to be incredibly instrumental in this drop. They're going to want it to be more successful than any of these other, dumb apes or any of this other stuff, because they have something to prove. And it has been statistically unwise to gamble against the Gemini twins. I don't like them for a lot of reasons, but I respect them for the way that they turn profit out of just about everything. And so I would not be betting against them. And I think this project is going to be ridiculous. My guess is that piece that I have, this little floaty piece right here, this 50 piece, which is ranked in the top, I think 120, 130, is probably a $500,000 piece 1 year from now. We shall see. All right.
And will you sell it then? And will you sell it then, though, when it gets to that price? That's the question.
You know what? It would depend on where I'm at in life.
Okay.
Would I sell it right now for $500,000? Probably.
Yeah, you should.
Would I sell it? Would I sell it for 125? Obviously not, because I didn't.
I would. Just saying. But I also don't have that love for art like you do. So your reasoning behind it makes sense. I get it.
Yeah, and that's why in the NFT space, the profit, the potential has to be secondary. You have to go into it knowing I lit this money on fire, but I love the artwork.
Right.
Period. Full stop. I've on my Beeple, as an example, I'll just show that real quick. 70 something. I got an offer a few weeks ago through Twitter, actually, a collector that's trying to gather up a bunch of he's trying to get all the Beeples, I guess. So I can flip this to that guy for 70K, but it would not change my life materially to have 70,000. Not that 70,000 is bad, but it's not going to move the needle. And I like the artwork. And to me, owning a Beeple sets you apart in the community. It's kind of like, it's like a Bored Ape or something like that. Owning a Beeple is like owning a piece of the history of the NFT space, which to me is important. So,
and you want to be there. You want to be in it.
Yeah.
So you're in it.
I love me some art. Okay.
Yeah. We have more news.
Shall we talk? You want to go headlines or markets?
Let's finish the headlines up because we have something here about Starbucks entering the metaverse. So I don't know much about this. If you look at the companies, the brands, the celebrities, the influencers that are trying to create digital NFT platform and business, I can't find one of them that has the treasure trove of assets that Starbucks has, from collectibles to the entire heritage of the company. Also, another quote, Starbucks is proud to be an innovation partner with Bakkt. Our teams worked closely together as Bakkt sought input in developing a unique and trusted payment experience that enables customers to unlock their value in digital assets from US dollars. Nick, how is a coffee company getting into NFTs? How is this going to be valuable in any way? What are your thoughts?
I think that Starbucks touches people. Well, let me say that their products touch consumers. Hopefully there's no one at Starbucks touching people, but their products touch people a lot. My buddy owns a great coffee shop. I still find myself at Starbucks every now and then. It's so good. So Howard Schultz has confirmed that Starbucks will be entering the metaverse, whatever that means, in 2022. NFT, everybody's going to say metaverse about everything. So it is what it is. So the initial announcement came as billionaire entrepreneur Howard Schultz was speaking at Open Forum on April 4th. He announced the company would be entering the NFT space before the end of 2022. And remember, they have a cool app. I use it all the time. It is very easy to use. It would be very easy to serve NFTs or other cool things against that app and make it a little bit more fun and start to gamify. They've already kind of been doing that with some of their kind of scratch off type stuff. So they're going to gamify purchases is what it seems like to me. Starbucks team confirmed news a few hours later, tweeting about it from their official Starbucks Twitter handle. Further details regarding the project and they haven't shared everything yet. It's a good chance they don't know exactly what they're doing. I mean, there's a great chance that they don't know exactly what they're doing. They've been, Schultz was recently appointed as the CEO of the company, and April 4th speech was the first time he'd addressed the team as their leader. So it's interesting that the first time he comes out as the official CEO, he's talking NFTs, which is kind of cool. I think in the future, we won't call them NFTs. It'll just be the way business is done. Your coupons, your tickets, your rewards, your all that kind of what would be paperwork or what would be email. If you want some kind of uniqueness to it, some kind of digital identity, it'll be a non-fungible token, but we won't call things non-fungible tokens. It'll just be the way we do business, and we will be past all of the verbiage. But this is where we're at now. So the crypto community is hopeful. Actually, got to say, the community means something different. The crypto community is hopeful that the new CEO will introduce more crypto-friendly measures for Starbucks, especially now that multiple mainstream companies are doing the same. Okay, Starbucks and Bakkt is probably the most interesting part of this. Starbucks and Bakkt. Bakkt is a company. They essentially were trying to create an exchange that was working with all of these industry partners so that you could go use some Bitcoin at Starbucks and you could use some Ethereum and they just wanted to create an easier access point. And they're also an exchange. They didn't really catch on that well. No, I mean, people just weren't super excited about it. And it was like the guy that owns, I think, or one of the kind of main guys at ARCA and the NYSE, his wife was the original, I guess, CEO, whatever, director of Bakkt. Bakkt kind of tried to launch a few times, but didn't quite get out the gate. But anyway, I think I got like $25 worth of free Bitcoin for signing up like 2 years ago, and then it fizzled. But anyway, because of its strong presence in the kind of global retail ecosystem, industry leaders do believe that Starbucks NFT venture could be a successful one. Think about it. There's a lot of people, I don't know if you know this, Eric, tons of people collect Starbucks mugs from like all over the world.
Yeah, I did know that. It's a thing.
But what do you do with, you're not drinking out of them.
I mean, so my wife once, she would get like a set of mugs. Like you get 8 mugs and they all match. I think that's boring. When you drink your coffee, you want different mugs. So I like getting random mugs. I wouldn't say I go collect them from around the world, but I like different mugs. But I drink out of them. There's a use there.
Do you have a mug that says world's greatest dad?
I don't think I have that one. I didn't buy that one. No.
That's surprising.
When you're one of the best dads, man, you don't have to have a mug saying it, right?
Surprising that you don't have that, though. I would have thought you would have had that.
I don't know how well you know me, Nick. You learn things about me every day.
I guess you receive accolades in direct proportion to your ability to earn them. Okay, back in 2019, Starbucks partnered with crypto company Bakkt. Yes, that's 3 years ago that Bakkt kind of fizzled. To become its first launch partner for a payment service. Then in March 2021, the crypto platform launched its digital wallet, the Bakkt app, which is terrible, by the way. Any of you, do not get the Bakkt app. It's terrible sauce. It will probably just corrupt your phone because it's so gross. It allowed Starbucks customers to recharge their Starbucks card. Wow. The digital wallet could also allow repeat customers convert supported loyalty and rewards points along with Bitcoin to recharge their balance on the Starbucks app. Look, I don't think anyone has ever, I'm going to say this, I don't think anyone has ever traded Bitcoin into Backed to juice up their Starbucks coffee card. Really? Come on, bro. I don't think that's happening, but
that's weird.
It is at least another big industry group that's participating in what looks to be the beginning as we develop out Web3. So that's kind of cool. All right. Should we move on from coffee mugs and not the world's best dad?
We shall. Let's move into gaming. The gaming world, Axie Infinity, which is an NFT game, probably the most popular one. Developers made some trade-offs that enabled 625 million Ronin breach, which is the currency inside of the game. The creator Sky Mavis has raised 150 million to reimburse users affected by the theft, but that math doesn't work out. He raised 150 million to refund 625 million. How's this working?
Cool. No, there's 625 million gone. He raised 150. I'm a little bit worried. I'm a little bit worried that this is what it's come to.
I hope not.
If you don't have enough money to repatriate losses, maybe you don't have enough money. For instance, are the way these guys running these companies like, well, we have $10. Let's put all $10 into this risky thing. Hope nothing happens.
Could be. It's a dollar and a dream, Nick. A dollar and a dream.
Like the farmer with his cow, and then the cow died, and the farmer's like, well, that never happened before.
Yeah. How do you pay the rent now? How do you pay the farm?
You don't have another baby cow growing, bro? Like, man. So, yeah, Sky Mavis is raising money. So you guys heard about this last week. Now, I will say this. The entire metaverse space, the metaverse plays, I guess you could say, which is basically Axie Infinity, Sandbox, and Decentraland, they are all getting decimated over the last quarter. They're all down so much. Axie Infinity is the only one that has anybody playing games. Like they have like about 100,000 people a day active users. You want to see how gross it is? This is not in this article, by the way. Do you want to guess how many active people are daily active users on Decentraland? You want to take a stab at it, Eric?
Oh, you're saying that this is down from what it used to be? Is that correct?
Yes.
I don't know what can you give me an idea of what the number was that used to be playing before like everything, or do you not have that number? I mean,
Axie Infinity is down 30%, and they're at 100,000-ish per day. What do you think Sandbox and Decentraland are at? Because all you hear is, oh, you got to buy Decentraland, you got to buy Sandbox.
Yeah, those are big ones. Let's 20,000. How many?
Anybody in the chat want to guess?
Is that lower than that?
What these big giant plays are doing in daily numbers? Yeah. Ben.
1,100?
1,100 is the big one. That's Sandbox. All the way up at 1,100. Decentraland is beneath 1,000. It's like 800 or 900.
That's not good for NFT gaming, Nick.
No, and these are the most popular ones. So then you see why I get so outraged when Monkey Coin which is pumped by a bunch of VCs, which are just out to stick it to you, but where they can pump a valuation of Yuga Labs, which owns Bored Apes and some other IP, to 4.5 billion. How on earth are they supposed to suck that money back out? How? It doesn't make any sense. It makes zero sense. And but Axie Infinity is the best in breed right now, which is not saying much. Look, if you had a video game that had 100,000 people a day playing, that'd be like, well, that wouldn't even be numbers to probably justify doing a part 2 of the game. Like if Call of Duty only had 100,000 people playing, there would not be a sequel.
A new Call of Duty.
Yeah, that's it. They're just like, that's not enough. That's not enough. So you need millions. But anyway, this is where the space is at. Well, why this in particular is interesting is the way they're kind of trying to back their way into fixing this. So a week after one of the largest crypto hacks to date, 625 million breach on the Ronin network bridge. And again, we're going to talk about this in a little bit, but there is this reality that if you don't follow some basic tenets of math and computer science, you fail. And it's just a matter of when you fail, not if. So there was this $625 million breach on this network bridge. Sky Mavis, the company that built it, acknowledged that its haste to grow the platform's user base may have caused it to cut corners on security. Oh, man, we want to get so big. Listen, Eric, I've got $5. I can use it on marketing or security. Marketing or security.
All day.
Yes.
Let's get as many people in there as we can. Risk security, but we want heads.
We're gonna moon. Now, you know that these guys already got paid when the token went up and they sold their tokens.
Yeah,
they've already cashed out. They're already millionaires, centimillionaires, decamillionaires.
True.
A few of them may even be billionaires. So they didn't lose anything. The only people that lost are, well, whoever owned part of that $625 million. So, man, the Ronin network is an Ethereum. It's an Ethereum Link sidechain used for blockchain game Axie Infinity. The bridge connecting it to Ethereum mainnet was exploited, and the attacker drained 25.5 million USDC, 173,000 ETH Ethereum on March 29th, totaling, give or take, 625 million. Of course, that amount's down a little bit because Ethereum's down. Okay. While racing for mainstream adoption, this is a quote, we made some trade-offs that ended up leaving us vulnerable to this sort of attack, which begs the question, if you knew you had some trade-offs, shouldn't they be paying back every single dollar that was lost if they did this willingly, right? Like, I don't understand how they don't feel completely liable. Sky Mavis announced a $150 million raise led by Binance, which is interesting. You say, well, wait a minute, why did Binance participate? Oh, because Binance is going to end up with equity. So then you wonder, well, I wonder who sponsored the attack. And I'm not saying anything. I'm just saying you start looking at all the incentives and some of the past behavior of some of these companies. And would it make sense to attack something and then when they're in peril, go in and buy it on the cheap? I'm just saying, just from a math perspective, game theoretically, it's interesting, is all.
You like math? You like math, Nick?
I'm a fan of it. Always have been.
Okay.
So anyway, keep that in the back of your mind. It's very interesting. It's also interesting to note that the attacker or attackers or attacking element chose to use and basically put the cash that they stole onto some exchanges you probably heard of, FTX, Binance, Huobi.
Ones you don't care for.
Well, I'm not saying I don't care for them. I'm just saying it's interesting that those are the exchanges rather than going and tumbling the cash. They went to those particular exchanges. It's just weird. That's all. You know what? It's probably just completely random. There's probably nothing is probably at all correlated. It's probably, I'm just reading too deep into this. Probably.
I am picking up what you're putting down there, Nick. Thank you.
Am I talking too fast? Are you listening too slow?
I am listening fast enough.
So
you want to get into
anyway, yeah. Don't sacrifice math for marketing, maybe. Yeah, because and I obviously don't think anybody from the Ronin network didn't do this. They didn't say, man, we got to get attacked. They got greedy and they got lazy. And that's what greedy and lazy kind of gets you. All right, Eric, where are we at?
We're at the market update here, Nick. So why don't you take us through why things are red?
They are so red. A little bit of hawkishness, a little bit of exhaustion. We've been going up and up and up and sideways and up and sideways and up for many, many weeks. And people started to borrow. And look, you saw it happen with Michael Saylor. These guys get enthusiastic. You saw it with Do Kwon over at Terra. They get enthusiastic. They start buying because they believe they know more than the whole rest of the planet. They believe they can see the future and that Bitcoin will never go down. Well, guess what? Yes, Bitcoin went down. It liquidated a lot of people. People got overly enthusiastic. They got blown up. The Solana crowd, the Dogecoin crowd, the gamblers. It's the same idiots. They got nuked. Don't trade on leverage in crypto. If you don't trade on leverage, you don't care about any of that behavior. You just see a buying opportunity. A year ago, we were 23% higher. I think these is probably, but again, it's always a good time to add Bitcoin in your portfolio in the kind of ratio that you're comfortable sleeping at night. Remember, no one can tell you what to do with your currency units. You gave up those breaths of your life to get paid by some person or entity. You take those currency units, you trade them into the crypto space. If you want to be here, it's incredibly volatile, and it will make your stomach hurt both directions. When it's going up, you're like, oh my God. When it's going down, you're like, oh my God, but you're never comfortable in crypto ever. So if you think, when are we going to get to that point where we're all happy? Never. You're never going to be happy in crypto, but you may be wealthy. So what would you rather have? I'll take a little disquietude and discomfort for the Lambos. Okay, so the Bitcoin is at 43.4. Cool. Interesting. It's made a lot of very juicy premium get pumped back into the derivative markets. So for you carry traders, there's probably some juice to be had there. For those of you that are trading cash secured puts and covered calls against Bitcoin, there's a little bit more premium there than there was a few weeks ago. So that's delightful. I like it. I sold 44s and 42s, but I sold the 44s. I think I got 1,100 was my average. So I'm still up on those. The 42s, those look like there's going to be money good. So, and that's cash secured puts. So again, that's, you've got to find what works for you and what you can be consistent in that you understand. And if you don't understand it, don't buy it, don't trade it, don't own it. Only own this stuff if you feel comfortable and you understand. And no one else can tell you when you're comfortable. That's a you decision. Ethereum, it sold off summarily, but look, we're only down on the day about 1.5, 2 points. And if you back out Bitcoin, let's give it 2%. Everything else is about the same. Look, 1. What are some of the big losers? Well, Near is a big loser, but Near is up 50% on the month, which is a lot. However, I think you're in a good spot because if you back to the beginning of the year, Near was approaching 20. Near just hoovered up another $350 million, I think yesterday in another round they did. So Near is absorbing investment capital real fast. And I think that's quite interesting. Oh, also, Eric, guess who participated in the most recent round of raising money for Near? FTX Ventures.
Really?
Yep.
That sounds like a good thing for them to be involved in.
I mean, when Bankman Fried Chicken gets into something, whether it's by hook or crook, the price tends to do well.
And it's doing well.
Yeah.
Well, not today.
Not today, but it's still up on the. It's still it's up on the week, and everybody else is getting. Matter of fact, there's only a few tokens that are up on the week, and Near is one of them.
True story.
So okay, in times like these, again, look at your 90-day, look at your 1 year. Make sure that you're balancing your portfolio to your risk tolerance or risk aversion, whichever way if you're a glasses half full or glasses half empty type person. Only other thing I thought was kind of cool. I've been starting to back into things like NewNet. I'm currently adding Looks token. Eric, tell us about your genius trade from like 1 week ago, right?
Yeah, I think it was more luck than genius, but I noticed that the Looks tokens, they were getting up around that mark where you said you sold a little bit. It was like $2.90. And I was in all of my Looks after buying and staking for approximately $2.40. So I knew that the staking round is about halfway through. I decided to, as you have recommended to us, to pull out my initial investment. So I pulled out all of my initial investment. And I swear, Nick, it seemed like an hour later, Looks started going down. And it's continuously been going down. But I don't care now. I still have a bunch of looks staked. It's all profit. I'm going to let it hang out there, earning Ethereum because I'm still staking with the Ethereum staking rewards, which I love. And you know, I'm making guaranteed money from the staking from the Ethereum, even if the looks tokens go to dust, which I don't think they're going to, though. I think they'll pop back at some point. But I'm in a comfortable position right now.
Yeah, me too. I'm just collecting, but I did, because the price of the token went down, I did decide to move from the looks staking that gave me just wrapped Ethereum. I did move back into the compounder, because if the price of the token is less, you're getting more tokens per Ethereum.
Right.
So the compounding effect seems to be, it benefits you a little bit more. Now, if the token should suddenly rise back to the $2-3 range, well, $3 range, I would go back and just collect the wrapped Ethereum. So that's kind of what I'm doing. When the token goes down, you're getting, because Ethereum hasn't sold off, not really, then you're getting more looks because the price of Ethereum held stronger. So that's kind of what I'm doing there.
So Nick, that must mean that you believe that the looks token is not going to go to dust. You have some value there.
Kind of.
Okay.
This is all profit. I did what you did. I just did it a week before you did. I went to the only position I have is profit. So I have 28,841 tokens, but that's the profit I had from a much bigger position. I pulled my original investment. This is all house money. I think there is a very good chance that this coin goes well below $1 in the next 35 days. Yep.
Hey, look at that. We were about on the same page there.
Yep.
Nick, we're like the same person.
Actually, we were exactly 7 times 5, bro.
Yeah. You're right. Incredible.
Boom.
This is nuts.
You know what? You're going to get world's best podcaster mug.
Yes.
Or
broadcaster. I mean, it already says broadcaster #1 right there.
World's
That's Eric,
greatest
not Brandon.
broadcaster mug. This guy.
Yes. Nick's sending me one. He just confirmed it. All right. Bye.
So yeah, that's all I've got as far as markets are concerned. So what? Buy quality assets. Determine what you consider quality. Buy in relation to your portfolio. Don't load up on any one asset because none of us know what the future looks like. Make some educated leveled bets, and I think you'll be just fine. All right, Eric, where are we at?
Well, we're into the strategy session, Nick, and you had mentioned that you like math a little bit. So we have some stuff here. There's the pillars of math, which I'm going to pop up on the screen. Yes. Why don't you take us through these?
I'm going to give you, well, it's more or less that you need that these are the ways that you work your way towards building a protocol. So I'm going to give you 3 threes. You can see the pillars of math, and that is you start with definitions that we can agree upon. You know, a lot of times when you're having an argument with somebody, a lot of times you might pretty much agree on most everything, but you haven't, in the beginning of the argument, determined what the definitions are for the various words you're using. Therefore, the way you communicate is imprecise. And if the way you communicate is imprecise, you might be arguing the exact same thing with imprecise words, imprecise tools. The verbiage is not, meshing. So you need very clear, precise definitions before you engage in anything, especially math. So you create your definitions. You need theorems, right? You need ideas that math, based on those definitions, could be proven one way or another, right? If you don't have some theory and theorems behind what you're building, you're just throwing stuff at a wall and seeing what sticks. And if you get big, you'll get nuked, okay? So you have very clear-cut, precise definitions. You have some theories and theorems that you're going to prove out. You then do the proofs. You do the work. You do the calculus. You do the math, okay? And what you're left with are a set of rigid kind of guidelines, a foundation for which you can build a protocol, or you can build a software, or you can build anything. But if you don't start with definitions, theorems, and proofs, you have nothing to build on. It's just whimsy, okay? So that's, you do the definitions, theorems, and proof, your pillars of math, and then you go build your protocol. This is why a lot of these protocols are broken, because they have some loose definitions, some weak assumptions The theorems are cool. They just don't decide to do proofs. Solana. They have some definitions. They have some theorems. Their proofs are weak and unproven. And they have an unscalable, broken blockchain that can't, in its current form, work. I'm sure they're going back to the drawing board and trying to fix things, but you just can't skip a step, especially when you're absorbing tons and tons and tons of money. And just because some new project launches, if there's a bunch of VCs behind it, that doesn't mean it's a good thing. VCs do not care about you. They take anything they can and repackage it. They get it for pennies on the dollar and they sell it to you, and then they are gone and you are nuked. And they don't care. VCs are worse than vultures because they do it from the front end instead of at least a vulture waits till you're dead to pick your eyes out. The VCs do it before you can even see them coming. So, again, you got to reduce your thinking, make things simple. Okay, so then you say, okay, we built this protocol because we had this core group, and I look at Cardano and Algorand and probably Cosmos as being the best example of definition, theorem, proof. Okay, these teams focused on kind of academia and using very clear definitions, quality theorems and ideas, and proving them mathematically, and then they built their protocols. Now, it still doesn't mean that there's no way to attack, but it means it's a lot tighter. Then it's just about the implementation. Is there some gap in the implementation? Because sometimes the mathematicians are not the same ones writing the code. So, right? But at least you can then go back and you can very rigidly dissect some kind of mistake and figure out exactly where it's coming from. Okay. So you built your protocol. Now we have the pillars of crypto transactions, which we've talked about before. Eric, do you remember those? There's 3 steps in any crypto transaction.
Nope.
What do you mean, nope? It's in your notes, bro. I wrote it for you.
You did?
Yeah, man.
Oh,
it's right.
Oh,
it's right underneath the pillars. I was going to throw you man, I'm lobbing these past home plate.
I'm sorry. Bro. I was not looking at my notes. Oh, well, of course I know. You have to, pillars of crypto transactions. It says it right there.
Yes.
Yeah.
Yes.
Agree on the blockchain. You have to achieve consensus, Nick.
Yes. Go
Am
on.
I right? Okay. Yes.
Yes.
Send the blockchain. You have to propagate it, of course,
yes.
and then verify the blockchain.
Yes.
Come on.
You verify the block. So think of a block as a chunk of data, like that cool little blob of paint, right? Agree on the block of data. Okay, you could say agree on the data. Agree, send, verify. Agree on it, and that's where proof of work, proof of stake, proof of history, proof of liveness, proof of validity. That's where all these proof of consensus mechanisms come in. Essentially, after that, all these blockchains are the same. All these distributed ledgers, these lattice networks, directed acyclic graphs, they're all the same. It's just, how do you achieve consensus? Well, you agree on what the data is, then you send that data out. That's the propagation step. You send it out to all the nodes. Then you verify it. You synchronize all the nodes. All the nodes go, cool, I got it, I agree. The nodes are not Byzantine. You'll hear Byzantine a lot. Byzantine. Think Byzantine, it just means sketch. It means dirty. It means fraud. It means scammy, lying, cheating, stealing, corrupt. Okay, that's Byzantine. A Byzantine general is a corrupt general. He's going to give bad information to other people. You can't trust him. And any system, any of these blockchains, any of these distributed systems, you have to assume you're going to be attacked by a certain amount of Byzantine players or Byzantine nodes, meaning corrupt, right? Your buddy that like you guys go hang out, but like secretly he's like angling for your girlfriend. He's Byzantine. He's a Byzantine node. The minute you go away on a trip, he's like going to deliver hot Campbell's soup to your girlfriend because she's got a cough. Anyway, so these are the pillars of crypto transactions. Agree, send, verify. Okay. Then we have the pillars of crypto project success. And they're even wider in scope. Eric, you want to take a stab at those?
Yeah, sure. I mean, let's start it out with use, utility, and adoption, Nick. We've said this many times. You said it many times, and I would never forget it.
use, utility, and adoption. So, and that's what the goal is. Use, that there's a clear use case and people use it, right? Like this thing does this. I'm going to use it for this. Great. Utility. The world is a slightly better place because of the utility it provides. And adoption. People and institutions, organizations, groups, whatever, they actually onboard and use said software or project or DApp. So that's what we're always looking for. Yeah. All right. So
Thanks,
now we're
Nick.
a little bit smarter. We're smarter now. We are all smarter now. Should we do some Q&A?
Oh, we should. I'll tell you, I feel very smart right now. As we get into the crypto Q&A, we have one coming in from Howard. We see Howard all the time. Howard's asking, I deposited 4 Ethereum into Singularity Net Dynaset, Ethereum, but I'm not clear on how to track my investment. Do I have to wait until April 11th for it to begin?
Yes. So they're just gathering funds right now, and then they will start actively trading those, I believe, on the 11th or on the 12th. Yep.
All right.
And actually, good on you. I was going to get into the Dynaset for Ethereum, but I missed it by like a day. It was already full. Matter of fact, it's funny because I was on Discord talking to Marcelo, who's the CEO, and he and we chat a lot. And so I said, hey, I'm going to throw some ETH over there. He's like, okay, great. We're almost full. Well, when he said we're almost full, they were already full.
Too late. Looks like Howard was ahead of you that time, huh?
Howard nailed it.
Howard wins.
I think he's going to do good. Matter of fact, Howard, I'm going to do a public guess, just a guess. It's a speculation because you've already invested, and it is what it is. Okay. I believe you're going to knock back about a 20% quarter. So you're going to be ahead of Ethereum price. Whatever the price is, you're going to be 20% better than the price of Ethereum in that Dynaset. Let's see.
That's the prediction.
That's my prediction. You just got it.
Cool. All right, let's move on to our next question here from Unsung. Nick, do we have more information on AGIX moving to the Cardano blockchain? Will there be a bridge? Will it affect the NTX drop? And what will be happening with our AGIX currently staked? That's like 4 questions in one, Nick. Can you handle that?
Yes. We don't have all the information, but I did talk to somebody at NewNet yesterday morning no, you know what? It was when Brerick and I were talking on Tuesday. So basically the way we know what we understand right now is that sometime between the 16th and the 18th, they will roll out the Cardano version of the AGIX token, which you can transfer to the Cardano network. The staking will be better. Do not do anything yet. I will give you more distinct, clear advice. There's no incentive to run and do anything. Let that first group of people transfer, move tokens, make sure nothing's broken. Also, NewNet is probably going to do before and after snapshots. For instance, they'll do a series of snapshots before they allow the bridge to open, and then they'll do snapshots on the backside on the Cardano network so that they can see if tokens transferred over, and you would still be allowed to receive your NTX airdrop. Remember that the registration for that means you have to go and click the registration. That's on the 20th of April. So this is all happening about 2 weeks from now, all kind of globbed together. So we got a lot of very interesting, what I think will be price accretive for AGIX. Also, the staking that you get on Singularity Net with AGIX is weak, not good, like 1%. I think it's going to go to like 3%. I think the staking is going to be out 3 times better, 300% better over with the Cardano token. Also, it incentivizes the Cardano community to own the token. I think you'll be able to manage it through your Daedalus wallet, any of your Cardano wallets, if you have a Navi wallet or any of these others. So there's many reasons this is going to be very good, but I would urge everyone to do absolutely nothing, and I will get some very clear information to pass on to you guys, probably as early as the end of next week.
Thanks, Nick. That's a good advice right there. Moving on to our next question from a new member. Hey, Nick. Sorry I'm a little behind, but I heard you speaking about MATIC becoming a layer 1 protocol. Can you explain this a little more, and do you have a higher price guess because it's going to be happening?
So, yeah, I believe, MATIC has kind of voiced that they don't just want to be known as a layer 2 that scales Ethereum. They want to be their own thing. They want to be their own full kind of blown protocol. And yeah, which is commendable, right? Like if you just live in Ethereum shadow, what happens when when Ethereum converts to proof of stake? Where does that leave you? Well, if all you do is make Ethereum better, that's not a business model, because when Ethereum gets better, you don't have any use. So these scaling solution platforms, these layer twos, they're looking to either become their own fully, flourishing blockchain or distributed system protocol, layer one, whatever you want to call it, with full use, utility, and adoption potential, or they want to be a layer two for everyone, right? They want to be everyone's layer two, where they could do transactions off chain and they could then reconcile those transactions at some frequency and push those back to the main chain. But you could imagine they wouldn't just have to service Ethereum. They could service a variety of networks. And so they could basically be these hubs in between other networks. So that's kind of interesting. That looks like what MATIC is trying to do. So what does that mean price-wise? Well, it's hard to estimate. Where do I compare? Well, listen, people are using MATIC and more than they're using Polkadot. So should it have twice the market cap? It probably should. The other question is, in the reverse, does Polkadot is a 21 billion market cap correct? Or does that make sense, or does that feel right for Polkadot? I'm not so sure which one's right. I don't know if MATIC should be worth twice as much or Polkadot should be worth half. That's kind of where I'm indecisive. I tend to believe that MATIC will go up, and if Polkadot doesn't do something, that they're going to lose ground pretty quickly.
Oh, maybe. Does that mean something there, Nick? Does that mean we should make some movements?
No, but I would not be adding to Polkadot. I just don't think that they haven't earned the right for you to add in the portfolio. So if you have a position in Polkadot, keep it, but I would not be adding new DOT because they don't seem to do anything at all to justify it.
Noted.
All right.
Thank you.
What else we got?
We have one more question pre-packaged from KC Kamisha. Is it possible to sell calls on FTX for your Bitcoin on hard wallet ledger X, or you have to send your Bitcoin to FTX exchange first?
You have to send it because they have to have access to the Bitcoin, because you're putting that up as collateral to sell the options against. It's a covered call. Now you can put cash, like currency. It'd be the same as saying, can I keep my dollars in my bank account at Chase, but then sell cash secured puts against Bitcoin on FTX? You would say, well, no, because they have to have something to lock up. So when you sell cash secured puts, you lock up the dollars and you sell against Bitcoin. When you sell again, the cash secures the position, right? So if you sell a 40K put, they lock up $40,000 or whatever percentage. You might sell one mini contract, which is 1%. So they lock up the $400, but you have to have the cash to lock up to sell the put in the first place. In the same way that to sell calls against Bitcoin, they have to be able to lock up the Bitcoin, because the person on the other end of that trade needs to be able to exercise that at the expiration and either take or not take your Bitcoin. Cool?
Cool. I grabbed one really quickly here from the chat as well, Nick. This one's from The Truth. Seems like the bridge is where hackers are targeting and executing. Do you think there'll be a more security on, I guess, the token bridges?
I think there's a lot of moving parts with these token bridges. When you're trying to create a product that's going across many, many chains, you now have to be a master at all of these chains. It's like, who knows more about bodies, a doctor, a human doctor, or a veterinarian? Veterinarian, because they have to know the biology and physiology of tons of different animals. So they have to be good at a lot. Yeah. Matter of fact, you'd probably rather have a vet doing surgery on you than a human doctor, because they're just exposed to more. So it's like that. So when you're creating these cross-chain bridges and these multi-chain kind of tools, you have to learn everybody's protocol and everyone's attack surface. And we're so early that I'm not sure these protocols know what their attack surfaces are. Solana, they didn't plan for their network to shut down 6 times for periods of up to 72 hours. It just did. we can blame it on a lot of things, like they weren't ready to launch all, but whatever. They didn't know that. They didn't launch it knowing, you got to hope. They didn't launch it knowing it would fail, right? None of these, the Axie Infinity guys, well, they might have known that something was on the horizon. So that gets a little bit sketch. But a lot of these multi-chain bridges, they just don't know what they don't know. And it's even the protocols themselves may not know what all the attack surfaces are. Look at how many DeFi projects get nuked on a daily basis. Crypto ain't easy. So there you go. And on that note, we shall bid you adieu. We will see you. We shall bid you pew pew. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk strung out on meth grandmother or Eric or Brandon or Brerick wouldn't do, which is nothing, because they will literally do everything. Keep your cupboards closed, and we out. We'll see you tomorrow. Pew 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 pew.